How sustainable is Filinvest Land's dividend, really? Investors looking for steady income found some reassurance in 2025. Filinvest Land Incorporated held its cash dividend steady at 5 centavos per share, matching its 2024 payout. That's a total of roughly 1.1 billion pesos. No accounting tricks, no illusions. The company backed these checks with solid numbers: 4.8 billion pesos in consolidated net income and nearly 7.9 billion in operating cash flow. The 2025 payout represents less than a third of net income, and it's covered many times over by operating cash. By property sector standards, that's a picture of prudence, not risk. The board's approach is measured. Their standing policy: pay out 20% of prior year net income, unless circumstances demand flexibility. That gives management the breathing room to balance shareholder returns with financial resilience. It's not a promise written in stone. It's a disciplined policy that can adapt if the environment shifts. But there's an asterisk: debt. Filinvest Land ended 2025 with nearly 83 billion pesos in interest-bearing debt, and finance charges climbed more than 10% year-on-year. While the debt-to-equity ratio remains well below covenant ceilings, financing costs have become a first-order concern. The company's balance sheet may still be healthy, but that health needs vigilance, not complacency. What keeps the dividend credible? Recurring rental income. More rentals grew nearly 10%. Co-living was up over 11%, and industrial parks surged by more than 130%. These steady cash inflows matter much more for dividend support than one-off development profits. Filinvest Land's liquidity is solid, with current assets heavily outweighing current liabilities, and all debt covenants met. The real tension lies in choice: sustaining dividends versus funding new growth. Based on 2025, Filinvest Land can maintain its current dividend. But sustaining it will depend on strong home sales, growing rental income, and keeping debt service in check. If those pillars hold, the dividend remains credible. If not, management has the discipline and the policy flexibility to protect the company first. In short, for now, the dividend is not lavish, but it is disciplined, sustainable, and backed by numbers, not just promises.